focus on these rather poor numbers, or are we looking ahead now to a better second half?
The market certainly is going to take note of these numbers, but overall, as you mentioned, the market is very much looking forward after this really series of very decent forward-looking indicators, which indeed indicate that growth momentum is coming back in the Eurozone.
Bunds are back at 170. Good value there. Is that what you're long now? Still shorting the periphery?
Absolutely, at least in tactical terms. So for today, we think that at these levels and with the GDP data, bunds are a buy here. Also, given that this 170 area has held quite a few times over the past month, and we don't think that today we will get the sufficient or necessarily strong trigger to push us above that level. So indeed, long bunds and looking for some consolidation here in peripherals.
Okay, you say consolidation in peripherals. I mean, we've had an impressive recovery down there. How much longer can it go on?
Well, certainly it's a very valid question, given that we've seen quite sharp price moves now since over the past 2 weeks. And though we think that with the Italian election looming and basically, all the good news priced in peripherals, we think that a further basically a re-widening is on the cards here for peripheral spreads.
Of course, G20 finance ministers are meeting. There's been a lot of confusion, more so in the FX markets, about this G7 statement on Japan. To what extent did that confusion spill over into the rate markets?
Well, at least in our markets, we didn't see too much of an impact. Of course, the market is taking note that basically the ECB is now regarded as the hawkish central bank when we compare it with Japan or even the likes of the Fed. But overall, it seems to really be an FX story. But also, as we've seen, these FX movements can feed through into rate space, given that also the ECB is now watching the currency moves quite vigilantly.